Hello, fellow traders of the world. Dadas here, speaking to you from the Dadas Trading Room Discord server, where I every day I stream my screen live. You can interact with me. You can ask me questions. So please, you are sincerely invited to my Dadas Trading Room Discord server. The link with the invitation is below in the descriptions, right? So below the video, of course. Now, what else is new? What is new is that I've decided that I would use a specific technique that I've just thought of recently. The technique is that independent of whether somebody is listening to me or not listening to me, I'll be going live in the sense of that I'll be speaking, not just streaming my own my screen and showing visually what I'm doing, but I'll be streaming my voice. Of course, most of the time I'll be speaking in Polish, but if anybody joins who is an English speaker, I will gladly change over to my English, whatever it is. If it's good, if it's not good, or it's average, doesn't matter. I'll just use it, right? And I'll be out loud. I'll be analyzing the charts because I found that while I'm doing the vocal analysis, I'm actually able to concentrate on what I'm supposed to do, and it's like I'm telling myself the story, and then my thoughts are not wandering in other directions, and I'm not trying to figure out what the market would be doing, right? According to my opinion, but I'm simply then following whatever my strategy and my analysis will be, right? And I've also experienced that today because in the morning I did some voice analysis, right? And everything worked fine. And then by the end of the day, I managed to lose one trade, even though it was a very small trade, as you will see when I show it to you. But what I failed to do was to do the voice, the out loud voice analysis. I simply, as I very often used to do, right? Or I'm used to doing, maybe even. I decided that there's a high probability that the market would be going in a specific direction, of course, without doing the proper analysis. And also, there was one situation today where I was measuring the market in not a good way because I failed to talk to myself, right? So this is the DAX 30 market that I'm trading every day. That's all I'm trading, just this market, because it gives enough opportunities to make money. So we can clearly see that today the market was pretty much in the beginning of the day. It was one directional. It kept going up. It kept going up, and then it stopped. Right? It stopped and it started going down. Right here, it kind of bounced off, and we can ask ourselves, what did it bounce off of? So first of all, we have the annual level right here. Yeah. So this is the level. It's a pretty important level because it's the level of the closing price of last year, right? And we can clearly see that what happened today is that the annual candle turned to in the bullish direction for a moment, right? And it went up, then it went back down, and now what's this other barrier right here? Well, the other level is the daily level, right? So basically daily and weekly, of course, because it's well, no, not really, because the weekly should be, yeah, the weekly is below. Mm. So basically, according to the weekly candle is bullish. The monthly candle is decisively bullish because it's somewhere even very far below that. Now, the daily candle ended well more like a pin bar with a small with a small body, right? We can see that on on this mini chart down there, the daily mini chart, right? And however, it ended bullish, not bearish. So at this moment, we can expect. I think we can expect the price to return upwards, even though you might say no, 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 because this is a pin bar and the price is gonna go down. No, well, that's not what I am observing on the DAX 30 index. I mean, on the DAX 30 index, very often in this kind of situations, the price simply goes back, covers the wick and goes up. Of course, I'm not saying that it will happen 100%, but knowing DAX, it's there's a high probability that that's what will happen. Anyway, we'll take a look at it one more time by the end of this video. I'll do a little analysis on the H4 and daily charts, and anyway, or even maybe even monthly charts. Anyways, the situation today in the morning. So my in other words, no, not so much in the morning, but well, closer to noon, because it's basically 11 o'clock my time, right? And 12 o'clock the broker's time. So the candle is 11 o'clock broker's time, and it closes at 12 o'clock broker's time. And also the H4 candle closes at the same time. So that's the idea here. And I was supposed to trade this, right? So I was supposed to trade, not like this. I was supposed to trade the breakout of this candle going in the bullish direction, right? Like this, in the bullish direction. So that was in the morning. So I figured out that I entered a long trade right there, because of the price action right here, and because there were no decisive signals confirmed about any bearish movement, right? You see that the first signal became visible on the M15 after the closing of this candle. So I traded long right here, and of course I was pretty much aware of it that we are somewhere, because of these mm, daily average range, right? So the daily average range line was very close right here. Now that's basically why I was trading only a small distance. Anyway, so what happened right here is that this one trade, I was saying yesterday, yesterday I needed about 6 maybe 7 more pips to recover one loss. And exactly right here I got 11.5 pips, so I recovered fully from that loss with a little bit of a profit, right? Now, when the price started going down, I kind of missed the proper context, because basically the proper context would have to be like this. I mean, the most proper. I mean, yeah. Wait. I was measuring it like this, right? And I was thinking about it. Well, I was thinking that this is a pretty. This zone is a little bit too big, right? Because this zone is the whole zone is really like the range of the zone is 100 and around 160 pips, right? So I was thinking that this is too big. and I failed to do this because basically what I was supposed to do is either do this, right? So either measure it out to the no to the break of the previous bullish trend, or I could have just waited until this signal candle appeared, and then measured mm, the market according to this zero line right here. So the idea is, of course, that this zero line becomes the resistance zone, or perhaps not so much the resistance zone as the supply zone, right? So this here becomes the supply zone, mm, like this, like this. This here becomes the supply zone. Now, if the market respects the supply zone, or in other words, we don't see mm, mm, any demand, any not in the sense that any demand, but any significant demand that would be bigger than the supply, right? Then obviously the market is going down, and that's basically what I was supposed to be trading. I kind of measured it out a little bit differently. Nevertheless, I did get in here in this short. I did get from the Data Trade Ruler managers that this was a properly measured out with the Data Trade Ruler. I think it was measured out like this. Yeah, yep. It was measured out like this. Now I don't remember why I put the take profit right there. Maybe it was measured out in like this. Yeah, it was measured out. No, 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 no. No, it doesn't. It doesn't make any sense. Was it measured out like this? No. Anyways, yeah. However, it was measured out. It was measured out in the way that I put my take profit right there, and the market actually respected this, and took my take profit. But I didn't actually pay much attention to what was happening right here. I just left it. The stop loss was right there, right, and that's where it was. Okay, then the market moved quickly, so there was no chance to get in right here. I was thinking about maybe right here, but I was busy doing something else. So basically, and then I got this stupid idea right here to go in long. Why? Because I wasn't thinking in this context like I'm showing you right now. If I had been thinking in this context, if I had measured it out exactly like this, then I most probably wouldn't. I mean, yeah, quite surely I wouldn't be trading this long right here. But this long was simply based on the fact that the market turned around here. Sure, I looked at the H1 and I figured out, well, there weren't any special candles right here for showing the reversal of the trend. There wasn't anything really here, but nevertheless, I figured out that, yeah, in my head, I got this idea that, yeah, oh, it's close to the end of the day, so maybe they're gonna be trying to retest at least the level of this moving average, right? Mm, well, so I actually just, you see, I got in at a minimum lot. Also left it. I wasn't watching. I mean, I watched a little bit once or twice. I didn't take the profit that was there for a moment, and the trade got a stop loss. So basically, this was the beginning of a pretty significant movement. So I jumped in at two lots, and I made about almost 4 times more than I lost here. Almost, not exactly, but almost. Maybe 3.5 times more. Anyways, that's what happened. Now, basically, this short should have been taken somewhere up there. That would have been a good short, and that would have been a good short that could even make me 50 pips, right? So again, I missed the good short right there. I also sort of because of this basically because I stopped talking to myself right here. If I had been talking to myself like I'm doing it now, so right now I'm talking to you, of course, to whoever is listening, but basically nobody is listening at this moment. So basically, it's like I'm talking to myself, right? I fully realize that there will be some people who will be listening to this later on after I post it to YouTube. But right now, I'm talking to myself. Now, if I had been talking to myself in the same way, right, during the trading, so that was pretty easy. It was pretty easy. I mean, the signal showed up here immediately after the closing of this candle. So there was no question about that, right? So, of course, those three candles right here, they don't tell us anything yet because they are still working as support. Now, this candle obviously breaks the support, right? This candle obviously breaks the support and creates a new resistance, or in other words, creates a new potential supply level, because this is the demand level and this one creates a supply level. The demand level is broken. A new supply level has jumped out, right? And now, now is the time to make this measure, right? So because this measure turns out to be not the correct context, then we need to simply adjust the measurement to the levels, right? And then we actually got a perfect layout, yeah, of the individual levels, right, for our trading. Well, that's perhaps. Well, I know for sure that now I know for sure that this speaking to yourself technique is a very good one, because when we are speaking, we are actually listening to what we are saying. It's a what do you call it? Like a loop, right? Like a reverse, like the echo. I'm missing the English word for that. Like sometimes when you're talking, and somebody is listening and also hearing their own feedback loop, right? Yeah, yeah. So this is like a feedback loop. Yeah, I got the word. Yeah. So this is exactly like the feedback loop. So when we are speaking, our brain is actually doing the feedback loop. So we are speaking, and the brain is also listening to what to our own words, and because in that moment the brain is actually concentrated on one thing, and so the thoughts are not wandering around. And especially when somebody has a brain like mine, who that is pretty much creative, and in the sense that is always looking for new ideas. And I'm not the kind of a brain that likes to repeat the same thing over and over again, and that's why I'm having these type of trading problems, because trading, good trading, requires just perfect repetition of the same thing over and over and over and over again. And that's it. That's it. I mean, basically, you should basically work like a robot, like an expert advisor, right? An automatic robot. It's good if we could actually mm, code the whole idea and let the robot trade. Mm, I don't know. Maybe I'm getting closer to this type of because after all, what I've created here could be in a sense coded, but on the other hand, I also am aware that these arrow signals, they don't. Sometimes they pop up and then they disappear. So, uh, you know, uh, the code is not gonna wait for that. If the code sees the candle, I mean the signal, and then for example sees perhaps right there, right, right there yesterday, there was a red signal for a moment. So if I had coded the whole thing, and the code would have seen a red signal, and then would have seen this, right? Then basically the code, if properly written, the code would need to calculate these levels, right? And well, then there is the because yeah, I mean, one thing, maybe in this situation the code would have triggered a trade at this level, but then it would have to then there is the question, if we get out at this level, or we get out close the position at this level, or this level, or this level, or what, right? And then it might become those are the points where they become, I don't know, but I don't know. I mean, I have to think it through. Maybe I'll be able to create something like that. And if I create something like that, mm, because even the daily ranges could be coded, even the ATRs could be coded conditions, and every element could be coded, and there could be functions that look around where we are, and for example, take a trade or not take a trade, depending on where we are, right? Because mm, we would have to mm, a code has to know, for example, how many periods behind would this signal need to be, for example, right? Uh, and then what to do, because basically right here we needed to do, but I got this idea today. I mean, like I thought of it that it's a better way to measure it like this. You see, to measure this to the, well, at least that's what it looks like. At least for the moment, that's what it looks like. So, well, okay, I'll be thinking about it. Anyways, that's enough for today. The day is in plus, it's positive, so we can see that I've managed to recover back to 2024. So we are like as if starting afresh with our capital of $2,000, and now let's see if perhaps this time we can go a longer time without making serious drawbacks. Perhaps we could make $1,000, or double the account in a relatively short time. Uh, we will see, right? Stick stick with me. You'll learn a lot. Thanks a lot for today. Please please like the YouTube channel. Please subscribe if you already haven't. Hit the notification bell. Like I said, the link to my Patreon server, to my Discord server, the Dada's Trading Room Discord server. The invitation with the link is below in the descriptions. Also, you can become my Patreon. A patron at patreon.com. Also, the link is below in the descriptions. And in the Dada's Trading Room Discord server, there's a special channel where you can read what the benefits are. So the channel is called Patreon Benefits, and you can read there in English and in Polish. Okay. Thanks a lot for today. Please keep safe. Don't be stupid. And see you next time. Bye.